Hi, how's it going everyone? My name is Henk and welcome back to the channel. Now in this video we'll be taking a look at Kathmandu Holdings Limited to see whether or not this is a good company for you to invest in. Now Kathmandu is obviously a very iconic Australasian brand, and I want to go through its financials and some of its reports to see if there's anything there that particularly stands out. So without further ado, let's get straight into it. As many of you already know, Kathmandu is an outdoor retail brand selling mainly apparel and also footwear for outdoor hiking. And they also sell surfing apparels as well. Now, Kathmandu has three main brands under their name. They have their main Kathmandu brand, which is their outdoor lifestyle brand, which they actually started in New Zealand more than 30 years ago. They also have their main surfing brand, which is Rip Curl, and it's one of the bigger surfing brands out there. They also have a footwear apparel brand called Oboz. I'm not sure if I'm pronouncing that correctly. And it used to be a Canadian company that got bought out by Kathmandu. So overall, they have three main brands under their name. So first off, let's take a look at the financials for Kathmandu Holdings Limited. So over the past couple of years, they have a slow increase in their total revenue by around 5% or so. And in 2019, they acquired the Rip Curl brand, which allowed them to achieve a massive boost in sales. So for the financial year of 2020, they actually had close to a 50% increase in total revenue, mainly on the back of the huge amount of sales acquired by the Rip Curl brand. However, in terms of actual earnings and net income, over the past couple of years, they have a slight increase in their net income, but in the financial year of 2020, they had a massive decrease in the total amount of net income from around $50 million the year before to $8 million, which is a huge decrease. Now let's take a look at some of the other financials for Kathmandu Holdings. They have a PE ratio of around 50, which is very high compared to the overall New Zealand market of around 20 to 23 PE ratio, which means that Kathmandu Holdings may be considered a little bit overpriced at the moment. But of course, PE ratio does not tell you the full story. They have a dividend of $0.02, which is 2 cents per share, which is a 1.25% dividend payout rate. Now, it is noted that in the year of 2020, they have suspended their dividend payout, and they had just resumed their dividend payout as of this year. In terms of a return on investment for the company, they have a return on equity of 3.46%, which is very low for a company of Kathmandu's size. Normally, a good return on equity would be around 20%, so you want to look for companies that have a higher return on equity. Quarterly earnings growth for Kathmandu is over 200%, which means that they are getting more sales after all of the lockdown that's been happening last year. Now, they have a current ratio of 2.46%, which means that they have twice the amount of current assets than their current ratio, which is definitely a good sign. They have a forward dividend yield of 1.25%, which does not make them a particularly enticing dividend stock. I mean, they do pay a dividend, but it's not a particularly high dividend. In terms of next couple of years of growth estimate, it is estimated over the next 5 years they would achieve an annual growth of around 10%, which is actually not too bad. If we take a look at some of the target price for Kathmandu Holdings Limited on Market Screener, now there's an average target price for some analysts of $1.73, with its current price of around $1.56, which means that it's probably around 10% under price. So some analysts believe that they still have a bit to go to reach their target price. But again, these are only the prediction of 2 company analysts, so you would have to take it with a grain of salt. Now let's go and take a look at the first half results presentation for the financial year of 2021 and see if we can find some useful information. One of the main things that particularly impacted the number of sales was the shutdown of the stores due to all of the lockdown that happened, and the decline in international travelers that severely affected the amount of people that purchase a lot of these outdoor clothing products. In terms of first half sales for the year 2021, it's up by 12% compared to the previous year, and the profits are up by around 10%. However, the increase in sales and profit are pretty much completely due to the Ripco brand. So the Ripco brand increased its sales by more than 80% compared to first half of last year. And they also increased their profit margin by around 86%. Compared with the Kathmandu core brand, the Kathmandu core brand has actually seen a decrease in its sales compared to last year, down by around 35%. And its profit has also been down by around 35%. So while on one hand the Ripco brand is doing extremely well, the Kathmandu brand is not doing as well so much. On the other hand, the Oboz footwear brand has a slight increase in sales of around 4% and a slight decrease in profit margin. Basically, Ripco is doing really well while Kathmandu and Oboz brand is not doing as well. So basically, everything is propped up by the Ripco brand. Let's now take a look at the share chart for Kathmandu Holdings Limited. So they had a huge drop around March of 2020, much like all the other companies during that period of time. And since then, their share price has bounced back to around the $1.20 to $1.40 region. But it has not really received any traction, and it's just been bouncing around within this range over the past year. Now, recently, over the past month or so, it has finally broken the $1.50 region, but it has still a long way to go for it to go back to its highs before all the lockdown that has happened. So really, most of the investors are still in a wait-and-see mode with Kathmandu Holdings Limited. On the 29th of June, they have made an announcement that the latest round of lockdowns would potentially impact the Australian trade. So they had new lockdowns in New South Wales, Australia, which would force the stores to close for a period of time again. And they are expecting that it would further reduce their sales. The only upside is that Ripco continue to trade strongly in key regions of North America and Europe, where it is actually summer at the moment. And many people have been taking up surfing because it's summer and people are trying to get out when they can and pick up new hobbies. So what do I think about Kathmandu as a company to invest in? Now, in the past, Kathmandu used to have some of the best outdoor gears available at a very reasonably cheap price. These days, there's just so many different competitions going on at the moment. There's icebreakers, there's Ferry Down, there's MacPack, there's so many different brands. And a lot of people that you talk to basically consider Kathmandu as kind of just a medium, like middle of the range brand that it just doesn't seem to stand out anymore. So I think Kathmandu is really losing its advantage as one of the industry leaders in the outdoor apparel brand. And instead, there is a lot more focus on the Ripco brand. Now, while Ripco brand continues on doing reasonably well in the overseas market, they seem to be not able to capture the same amount of market share with their main Kathmandu brand. So for this particular reason, I will probably stay on the sidelines for the Kathmandu company. To me, the main Kathmandu brand is starting to lose a lot of market shares as an outdoor apparel company to a lot of the competitor clothing companies out there. Now, while Ripco still has extremely strong sales in the overseas market, they are kind of not really growing their main Kathmandu brand significantly. And this gives me a quite great concern if I were to invest in the company. Now, this coupled with the fact that lockdown is still being an ongoing thing through in New Zealand and Australia, there is also a huge restriction in the amount of overseas tourists that can come to New Zealand and Australia, and that for certain would impact the sales number for Kathmandu. In addition to that, Kathmandu does not have a huge return on equity for their company investments. So for these reasons, personally, I will not be investing in the Kathmandu company. But let me know what you think down in the comments below, and I will see you in the next video. Peace.